Liberation Day is going to put a damper on our spring market. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, April 4th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or a home buyer. Starting off, we'll look at how the market performed this week. There are now 57 homes active on the market, which is up from the 51 we had last week. The average asking price is about the same, $2,112,000, a little less than the $2,200,000 average we had last week. 6 homes went pending, 1 less than last week, but the average asking price for those pending sales increased significantly from $1.755 last week up to $1,948,000 this week. And 9 homes closed this week, a few less than last week, but the average closing price is about the same at $2,095,000, up a little bit from the $2,041,000 average we had last week. So now that we know how the market performed this past week, we like to look at the broader market indicators that help us know where the market might be heading. Before we do that, if you find this information helpful, you can subscribe so you don't miss out on future updates. And why not share it with a friend also? Everyone deserves to be in the know about their local real estate market. Okay, let's look at those broader market indicators. Starting with the inventory. Inventory climbed again this week and is approaching the 60 house mark. Sellers are slowly entering the market and pending sales are struggling to keep up. If this trend continues for the next few weeks, we are going to be looking at a true buyer's market. The pending sales numbers might not be keeping up, but the positive spin on this is that only 1 home that went pending this past week had been on the market for more than 2 weeks. Most homes that went pending did so in less than a week. With the pending sales not increasing to match the new inventory, the turnover rate did drop again this week. Keeps coming back down after we had reached over that 100% mark at the beginning of last month. We are now well under the 50% mark, meaning it's taking twice as long as normal to get all of the housing inventory to turn over. What is interesting is that the majority of homes that are pending are doing so quickly. What I think this tells us is that homes either need to be absolutely special or they need to be priced very aggressively to sell quickly in this market. But it is still very doable to get competitive offers quickly if you use the right strategy. Part of the reason I'm not too worried about the current market direction is that the homes continue to close at strong prices. On top of that, the average asking price for pending sales increased this week, meaning that the average sales price should hold strong. What's more is the homes that are going pending are still doing so with a very short time on market. I think that that means this over-under number will stay firmly in the over range like it has been for the past several weeks. Similarly to the over-under numbers, the average sales price continues to perform well. It increased a fraction of a percent this week, just a little bit. With average prices holding steady, that reinforces my belief that this trade war situation will be a temporary setback to our otherwise very healthy housing market. One of the things that reinforces this thought is the pending sales price range. Typically, when a market really starts to slow down, the real high-priced homes stop selling altogether. We had 2 of the 6 homes that went pending this week asking over $2.1 million. That is commensurate with the ratio of sub $2 million versus over $2 million priced homes currently on the market, meaning that it's not like we have all of the low-priced homes selling quickly and all of the high-priced homes just sitting there forever. So as long as all price ranges continue to sell, I trust that we will see a rebound in an otherwise down market. With the tariffs being announced at the end of this week, it's no surprise to see that the stock market is reacting poorly. The Triple Q fund is down 5% to end the week. It is likely that the stock market will stay down as we wait to see what the global repercussions will be to the tariffs and if the administration will hold firm on the announcement or adjust its approach. I don't think we will know anything firm about the real long-term effects of these tariffs before the end of this month. So we're probably looking at markets staying down for a while, for the foreseeable future at least. In all the economic turmoil this week, one thing held pat. Interest rates have not moved more than 2 basis points up or down for the past month. This week was no different as they moved down just 1 basis point. Although I have seen some speculation online that this could be one positive result in the short term from the trade war. If stocks continue to fall, we could see interest rates drop significantly, but only time will tell on that as well. The main takeaway for me this week is that we are hovering on the precipice of a true buyer's market. With the economic uncertainty surrounding the tariffs and the potential fallout of a full-on trade war, buyers are going to be much more conservative about the offers they are willing to make. That being said, we are still seeing the homes that are priced very well, or just beautiful and standout properties, getting competitive offers very quickly. It behooves sellers in this type of market to be very realistic about what the market is doing and how much they can make their house stand out in what is becoming a congested inventory. And if you are a buyer, unless that house screams, "Buy me now," you can be more selective on what you need to offer to make that house your home. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on how this market continues to shape up, especially in this unique global economic situation we're dealing with now. And if you have any questions about how you can navigate the stressful and often confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and we'll see you next week with a new update.